Tech is the best performing sector in the S&P 500 this year as spending by companies does begin to show improvement. But how much upside is there to this story? Well, for today's Tech Tuesday special segment, we're joined now by Abhi Talwalkar. He's the CEO of LSI Corporation. He's live in San Francisco. LSI, as you may know, produces chips for big name companies like IBM and Seagate Technologies. So your stock is up about 60% so far this year. The bet seems to be corporations are going to get back to spending. What's the spending environment like versus 2 years ago?
Versus 2 years ago, it's certainly depressed. But at the same time, if you look at the second half, we're starting to experience pretty good spending by corporations. The first half was very tight. But in the second half, we're seeing IT managers loosen the grip on their overall budgets, and budgets are starting to be spent. We're starting to see seasonality come back into corporate spending in the second half.
Now, who's doing that spending? Are they the same customers as 2 years ago, or are these different industries?
No, I think it's a lot of the same customers. Clearly, there's continued build-out taking place in very large data centers supporting a lot of the Web 2.0. But I think mid-market, large companies are starting to spend again. Well, when you look at the environment that you're in and the competitive space you're in, you've said publicly before that you think there are just too many players out there in the semiconductor industry. Do you plan on gobbling any of them up? Well, I certainly don't want to make any comments relative to any future acquisitions, but the semiconductor industry has been consolidating. If you look at a number of the different segments, the handset industry, which we don't participate in, which we actually divested several years ago, has consolidated significantly over the last several years. Networking chips is another large segment that is very fragmented today. So overall, I would say that the semiconductor industry has too many players and does need to continue to see a level of consolidation because the intense R&D requirements that exist and the constant churn that has to be supported by tech companies.
Now, you've got $550 million in cash on hand. You said you don't want to comment on any deals. I understand that, but you plan on spending that cash?
No, not at this point in time. I mean, right now we're focused on very tight expense controls, continue to drive positive operating cash flows, and a very clear focus on driving improvement to our business model performance. We have been a consolidator over the last several years, but today we're very comfortable with the two markets that we're in, storage and networking. We have all the pieces of technology and products that we need to compete and continue to grow the company in these two segments.
What segments of the business are the most promising? I mean, are you looking at desktops? Are you looking at laptops? What segment of the business is showing the most growth?
You know, we're seeing growth actually right now in the second half across all categories. We're seeing tremendous strength in server sales. We sell a lot of chips and solutions into the server companies, and they're seeing tremendous growth driven by North America, but also outside of the U.S. The new server technology is driving significant ROI for end customers, and that's driving a lot of the build-out that's starting to occur again. Storage systems is seeing tremendous growth. That was the first area that we saw corporate spending return. That's because data continues to grow at 40 to 50% per year, and people have to keep up with the management and storage of that data.
Now, you say corporations are spending. You've seen the business in your own bottom line, but then you hear from other players in the industry, like Intel, who say really wait till next year to see any big checks be written. What's the reality?
Well, I think both are accurate statements. We saw corporations tighten up spending tremendously in the fourth quarter last year and throughout the first half of this year. I would argue tech was almost viewed as discretionary spending for a couple quarters as people had so much uncertainty as to what the future was. As people realized that we'd probably hit a bottom in terms of the overall world's economies, people started to spend again because there's a real need and demand to buy new technology to keep businesses competitive. So we're seeing that loosen up over the past quarter or two and into the fourth quarter. I do agree that 2010, the second half, actually bodes really well for tech. There's going to be a number of drivers that should work very well for technology.
What are you hearing from some of your customers on end demand right now?
End demand right now is fairly positive. Again, you've got different drivers. North America relative to server and storage technology is very strong. The PC market is being aided by continued growth in emerging markets. Obviously, China is the big topic. China continues to drive a big build-out relative to its wireless
infrastructure for all its mobile subscribers. And even Europe, in Western Europe, regions are starting to recover again and come back to life relative to corporate spending on tech.
All right. Western Europe, well, China, also the big story for you in the tech space. Thank you so much, Abhi, for joining us for this live Tech Tuesday segment. It's the CEO of LSI joining us live from San Francisco this morning.